think about it every second. Just this massive flood of financial transactions whipping around the globe. Trillions of dollars.
Yeah, it's almost impossible to picture the scale.
And behind the scenes, there are these unseen systems constantly watching, filtering. That's what we're digging into today. Transaction monitoring and filtering programs. TMPs for short.
Right. They're essentially the digital gatekeepers for our financial world.
And the sources we've looked at from FinCrime intelligence, they really they detailed just how complex these systems are and how vital.
Absolutely vital. It's easy to take financial security for granted, you know. But TMPs are this fundamental protection layer. I mean, think about it. These systems might be the only thing stopping billions from funding, say, terrorism or human trafficking each year.
That really puts it in perspective. This isn't just about catching minor mistakes. It's the front line against major financial crime.
Exactly.
So our goal for this deep dive is to, well, get beyond just the basics. We want to explore how they actually work, the challenges they face, and where they're heading, give you a really clear picture.
Sounds good.
Okay, let's start right at the beginning then. What are TMPs fundamentally designed to do?
Okay, so TMPs are essentially these sophisticated surveillance tools that financial institutions use. We're talking banks, credit unions, payment processors, anyone handling money. They use these systems to sift through the huge volumes of transaction data they process every day. They're like digital analysts, constantly monitoring, filtering, looking for anything odd.
Odd how? What are they looking for?
Anything that deviates from normal patterns, really, or anything that has the hallmarks of, illicit finance. Money laundering, terrorist financing, sanctions evasion.
Okay, so how do they actually do that with so much data flying around? What's the engine driving it?
Well, the core is really algorithms and rule-based systems. Think of them as sets of instructions.
Okay.
These instructions tell the system what specific patterns or criteria to flag in the transaction data. For example, a rule might say, flag any transaction over, say, $10,000 going to this specific high-risk country.
Right. Simple enough.
Some are simple like that, if-then rules. But others can be much more complex, using statistical models to spot unusual activity based on, like, historical data and known risk factors. They look at a whole range of data points for each transaction.
So it's all about spotting those red flags, those anomalies that could signal a problem. What makes a TMP system effective, though? What are the key ingredients?
Good question. Several things are crucial. First off, it has to be risk-based.
Risk-based, meaning?
Meaning the monitoring isn't one-size-fits-all. It has to be tailored to the specific risks that particular financial institution faces. A small local bank has different risks than a huge global investment bank.
Sure. Different customers, different locations.
Exactly. The monitoring needs to reflect their customer types, where they operate geographically, the products and services they offer. All of that shapes their unique risk profile.
That makes total sense. A custom fit. What else is key?
The interaction between automation and human analysis, that's critical. Look, the volume of transactions is just too massive for humans alone. So you need the automated systems to do that first pass, to flag things.
Right, the initial sift.
But then you absolutely need skilled human analysts to review those flags, those alerts. This human oversight is essential to figure out what's a real risk versus, well, what's just noise.
Noise like false positives. We hear that term a lot.
Precisely. False positives are a major headache. If your system flags too many perfectly legitimate transactions, your compliance team gets swamped.
I can imagine. Wasting time, resources.
Exactly. And it can slow things down, potentially even block legitimate customer payments. So, yeah, reducing false positives while still catching the real threats, that's the balancing act. Having experienced people investigate the alerts is key to that.
Okay, so human oversight is vital. What about timing? Does it matter when the monitoring happens?
It does. There are basically two main approaches. Real-time and batch monitoring.
Real-time and batch. What's the difference?
Real-time systems. Well, they try to analyze and potentially block a suspicious transaction before it even goes through, like an immediate checkpoint.
Ah, okay. Proactive.
Right. Batch monitoring, on the other hand, looks at transactions after they've been processed, usually in groups or batches. It's more about analyzing patterns over time, looking for trends that might indicate something fishy.
So like an audit after the fact?
Kind of, yeah.
Yeah.
It helps spot more subtle, long-term schemes, perhaps.
Do institutions usually pick one or the other?
Generally, the best practice is a layered approach. Using both real-time and batch monitoring gives you more comprehensive coverage against different types of illicit activity.
Okay, layered approach. Makes sense. So an alert gets flagged. What happens next?
There needs to be a really clear, structured process for handling that alert, what we call alert management and case investigation.
Right.
This means having defined procedures for, escalating the alert if it looks serious, conducting a thorough investigation, digging into the details, and then, if the suspicion is confirmed, filing a SAR, suspicious activity report.
Hmm.
That goes to the regulators, the financial intelligence units. It's a formal notification.
Got it.
And one last crucial piece, the models themselves, the algorithms and rules. They can't just be set and forgotten
Why not?
because the criminals are always changing tactics.
Yeah.
And customer behavior evolves too. So you need constant model validation and tuning, regular testing, tweaking the rules, updating the algorithms to make sure they're still effective. Otherwise, they quickly become outdated.
It sounds like a constant state of vigilance and adaptation.
That's exactly what it is.
Now, you mentioned challenges. We talked about false positives. What other big hurdles do these systems face?
Well, as I just touched on, the criminals themselves, they are always trying to find new ways around the controls.
Hmm.
It's a continuous cat and mouse game. As monitoring gets better, they get craftier.
A constant arms race, almost.
Pretty much. Another huge challenge is data quality. This is fundamental.
Also,
If the data going into the TMP system is bad, incomplete, inaccurate, inconsistent, then the output, the analysis, is going to be flawed. It severely undermines the whole point. Garbage in, garbage out, as they say.
right, you can't monitor effectively if you don't have good information to start with.
Exactly. And then there's the pressure from regulators. It's constantly increasing.
They're demanding more.
Yeah, they're not just checking if you have a TMP system anymore. They want proof that it actually works,
Hmm.
that it's effective, that it's adaptable to new threats. This requires serious, ongoing investment.
Investment in tech, in people.
Both. Significant investment in both.
Okay, given those challenges, the evolving criminals, the data issues, the regulatory heat technology must be playing a massive role in trying to keep up, right? How are things like AI changing the game?
Oh, absolutely. This is where we're seeing some of the biggest shifts. AI and machine learning, or ML, they bring powerful new capabilities to the table.
How do they differ from the older rule-based systems?
Well, traditional rules are great at catching known patterns, things you specifically program them to look for. But AI and ML can analyze enormous data sets and spot much more complex, subtle, non-obvious patterns. Things a human analyst or even a predefined rule might easily miss.
So they can find the unknown unknowns, potentially.
That's the idea. And crucially, they can learn. As new criminal techniques emerge, these systems can adapt their models automatically, making the monitoring much more dynamic and hopefully effective over time.
That adaptability sounds key. Are there other specific technologies making waves here?
Definitely. Behavioral analytics is a big one.
Behavioral analytics. What's that involve?
It's about establishing a baseline of normal activity for each customer. What are their typical transaction types, amounts, frequencies, locations?
Okay, their financial fingerprint? Sort of.
Kind of, yeah. And then the system monitors for deviations from that baseline in real time. So if a customer suddenly starts making large frequent transfers to a country they've never dealt with
That would
before,
raise a flag.
exactly, it flags that deviation for closer review. It's very intuitive.
Makes sense. What else?
Then there's graph analytics. This is really interesting. It focuses on visualizing the relationships between accounts and transactions.
Mapping the connections.
Right. By creating these network maps, you can sometimes uncover hidden links. Maybe seemingly unrelated accounts were all funneling money to the same place or controlled by the same hidden network, things you'd never spot just looking at transactions one by one.
That sounds powerful for uncovering organized crime rings.
It could be very effective for that, yes. And finally, NLP, natural language processing.
Processing text. How does that apply?
Think about the information within payment messages, the notes, the references. NLP can analyze that unstructured text data.
Ah, okay.
It can help detect things like potential sanctions violations. Maybe someone mentions a sanctioned entity or vessel, or references to illegal goods or activities that wouldn't show up in just the numbers.
So it's reading between the lines, almost. It really feels like a move towards much more intelligent, proactive monitoring.
That's the direction, absolutely.
Yeah.
Moving beyond just reacting to known bad patterns toward anticipating and preventing financial crime more effectively.
So we've got the mechanics, the tech. What about the regulators? What are they really looking for when they assess a TMP? What are the key expectations?
Regulators focus on several core areas. Documentation is absolutely huge.
Paper trails.
Meticulous paper trails. Institutions need detailed records of everything. Their TMP policies, their procedures, why they made certain adjustments to their models, any system changes. It all needs to be documented and auditable.
So they can see the thinking and the history.
Exactly. They also expect independent testing. This usually means regular internal audits, but often also bringing in external third-party experts.
An objective review.
Right. To get an unbiased assessment of how effective the TMP really is and whether it's compliant. It helps find blind spots.
Okay. What else?
Training. Continuous training for staff is critical. Compliance teams, operations staff, anyone involved needs to be kept up to date on new risks, new criminal methods, and how to actually use the monitoring systems properly.
The best tech is useless if people don't know how to use it right.
Precisely. And finally, governance. Strong oversight from the top. Senior management needs to be actively involved, ensuring the TMP framework fits the institution's overall strategy and gets the resources it needs.
So it needs buy-in right from the leadership level.
Absolutely essential.
It sounds like a very comprehensive set of expectations. What happens if a bank or financial institution falls short? What are the consequences?
They can be really severe. We're talking potentially massive financial penalties from regulators, huge fines.
Ouch.
Significant reputational damage is another big one. Losing customer trust can be devastating. And in serious cases, there can be even stricter regulatory sanctions, things that might even limit their ability to operate.
Wow. So this isn't just a compliance checkbox. It's fundamental to their survival and the system's integrity.
It really is.
Looking ahead then, crystal ball time. What does the future hold for transaction monitoring and filtering? Where is this all heading?
Well, I think we'll definitely see more emphasis on real-time, cross-border monitoring as money moves faster and faster globally.
Instantly, almost.
Yeah, the ability to track and analyze those international flows as they happen becomes paramount for quick detection.
Makes sense. Anything else?
I expect we'll see much greater integration of external data sources, using things like open banking data, information from specialized intelligence providers, maybe even public records.
To build a richer picture.
Exactly. To create a more holistic risk assessment for customers and transactions, pulling in data from beyond just the institution's own walls.
Interesting. A wider net.
And as AI and ML become even more central, there's going to be a growing focus on explainable AI.
Explainable AI, meaning that AI has to explain itself.
Sort of, yeah. Regulators and the institutions themselves will want to understand why the AI flagged something. Not just getting an alert, but knowing the factors, the reasoning behind it. Transparency and interpretability are going to be key for trust and accountability.
So the black box needs to become a bit more transparent.
That's the challenge and the goal. Really, TMPs are transforming from, fairly static compliance tools into these dynamic intelligent systems right at the heart of fighting modern financial crime.
Okay, so let's quickly recap. Transaction monitoring and filtering programs, TMPs, they're these essential, often invisible systems protecting the financial world. They're constantly evolving to fight sophisticated criminals.
Big job.
And while they face challenges data overload, false positives, new tech like AI and ML is making them smarter, faster, and more predictive.
That sums it up well. They're becoming much more proactive.
Okay. And on that note, here's something for you to think about as you go about your day. We all want fast, convenient financial transactions, right? So how do these unseen monitoring systems strike that crucial balance between giving us that speed and convenience and maintaining the security that protects us all? It's this fascinating tension, isn't it? Between technology, security, and the daily flow of money that keeps everything running.
A critical balancing act indeed.
Thanks for joining us for this deep dive.